After a not-so-hot day, where the averages gave up some of their recent gains,
The house of pain.
let me tell you something I love about this market. It has no patience for low-quality IPOs. Last year, we were plagued by initial public offerings with increasingly subpar fundamentals, until the WeWork deal crashed and burned before reaching the finish line. That spurred a market-wide sell-off in all things growth. But once we shook off the weakness and we were able to resume our march higher, it was in part because the IPO window had been slammed shut. The spigot of new deals was turned off, and that has often coincided with great times for the stock market. Don't get me wrong, I love it when a good company comes public. The problem is we get lots of large companies coming public because they introduce massive amounts of new supply to the stock market, and that new supply, let's just say, it overwhelms demand. And that's how you get downward pressure on everything else. I bring this up because we had our first high-profile IPO of the year yesterday. It was called Casper Sleep. And this is exactly the kind of rapidly growing but money-losing unicorn that Wall Street would have loved 12 months ago. They're disrupting the mattress industry. Casper's even got a tech angle, even though it's not really a tech company. In the first half of 2019, people would have lapped this thing up. They would have loved it. It probably would have doubled. But in 2020, oh, no, thank you. On Wednesday, we started hearing that there was trouble with the first major deal of the year. Casper had to slash its price range from $17 to $19 all the way down to $12 to $13. Then that night, the stock priced at $12. That is the bottom of the range. While Casper had a solid start, stock opening at $14.50, then surging to $15.85. Says, who the hell was buying it up there? Jimmy Chill would have called you, before I was Jimmy Chill, you'd hear about who you were. And then the stock turned around and closed at $13.50 yesterday. It's down $1 from its first trade, but up $1.50 from where it came public. So you're still in the green. So you got a decent first day pop. But to make that happen, the book runners had to dramatically lower the bar. If Casper had come public at 17, it would have been a disaster. At 12, it did okay for 24 hours. But then we came in today and the stock falls over, plunging 18%. To close at just over $11. If you got in on the deal, well, this one's not looking too good. But if you bought it at the open, let's just say you are down substantially. And I got to tell you, I'm glad that there's little appetite for something like Casper. That tells you this red-hot market still has discerning taste, that investors still have a healthy dose of skepticism. That's what you need if a market's only going to continue to go higher. Look, I don't want to dump on the company, even though obviously I'm dumping on the company. Casper uses technology to make a great mattress. They put a lot of thought and effort into figuring out the science of sleep. I sampled the goods on the floor of the New York Stock Exchange. Heck, I almost passed out. It was so darn good. Wow. And I'm not really a big sleep guy. And it was like other people have been on the pillow. This is not the time for that. Still, I take it as a given that Casper is an excellent product. I mean, I believe it's a well-run company. Yeah. Oh, no, it's a spooky IPO. They didn't do anything. But, man, we spent most of last year getting burned by new IPOs with turbocharged growth rates and losing. Oh, jeez. All right. Well, at least I have a nice suit on. The market finally turned on those deals. We broke the habit. Then Casper comes along, and it looks just like those unicorns. Casper's got solid growth rate, although that growth rate slowed to 20% last year. So I wouldn't really say it's a turbocharged growth story anymore. More importantly, it's a money loser. And it doesn't seem close to turning a profit anytime soon. Then there's the tech-adjacent thing. Casper is the veneer of technology, the patina. But it's definitely not in the tech business. They make mattresses, for heaven's sake. Reminiscent of something like Peloton, which tried to build itself as something more technologically oriented, even though what it really does is it makes fancy exercise bikes. So you got a high-growth thing. As growth is slowing down, where there's really nothing all that special about it because it's a mattress. With Casper, they talk about the sleep economy. The sleep economy. The sleep economy. I own Bar San Miguel, the Bar San Miguel economy. Anyway, they touted their technological prowess when it comes to designing mattresses and selling them online. They may be the best at designing mattresses and selling them online. They do have a terrific omni-channel strategy, but at the end of the day, this is a mattress company. It also sells a few other sleep-related accessories. A mattress! Worse, the IPO was the down round for its private investors. In March of 2019, Casper did a fundraising round that valued the business at $1.1 billion. The masters of the universe in Silicon Valley got this wrong. After the WeWork debacle slammed the IPO window shut, there was no chance of this company beating it with an IPO. It would have had to some public somewhere, I don't know, in the mid-20s is where it would have to be. Normally, this kind of thing scares away investors, and it probably should. If the market had gotten excited for this thing, well, you know what? You and I would be worried. It would be a bad sign. It could have opened the floodgates for even more deals of dubious quality. Technological paper, technological
merger.
Yeah, you got it. These are ecosystems, ecosystem, platform, softwares, hot sauce as a service. I mean, we hear everything from these clowns. When you drill down into the numbers, you do. I mean, come on, you do. I mean, come on, I got my own darn show. I can say it. What a bunch of jokers. I'm sorry I broke down the whole Jimmy Chill thing, but there. All right, Casper grew at a 20% clip in the first 9 months of 2019. That was down from 43% in 2018. I regard that as a major slowdown, not a speed up. Wall Street loves growth, but it's a lot less impressed by rapidly decelerating growth. Also, in the first 9 months of last year, they had $80 million worth of refunds, returns of discounts. That's like 20% of their gross sales. Strikes me as a very high number, but they send a mattress back. Whoa! Either they're marking down merchandise aggressively or they're seeing too many returns. Casper's got negative earnings. It's like negative yardage. I mean, you can't really took it back. Before interest, taxes, depreciation, and amortization, even negative cash flow from some operations. I'm calling that suboptimal. The margins are gradually moving in the right direction. But even last year, Casper's operating margins came in at negative 21%. Put it all together, and there's no constituency for this thing on Wall Street. Casper's not growing fast enough to appeal to the growth junkies, and as a money-losing operation, it can't appeal to the value guys. Granted, the stock's selling for less than one-time sales, which is cheap. It's cheaper than your typical fast grower with no earnings. But then again, it's got much slower growth than they do. I don't think it's cheap. I wish I could compare Casper to the other mattress companies, but Tempur Sealy, Sleep Number, and Purple Innovations are all profitable, which means they have actual price-earnings multiples. Look, I like the product. I laid down on it. I almost passed out on it. I like the brand, but I don't buy the whole sleep economy thing. I just don't. I think, you know what this is? This is a company that makes mattresses. It's a mattress company. I'm not interested in the stock here. I mean, one of the largest players in the space, Mattress Firm, which I told everyone was going to go bankrupt, filed for bankruptcy roughly a year ago. So I've got bed cred. I just came up with that. And this remains an incredibly crowded industry. You've got the big incumbents like Tempur Sealy and the Sleep Number, and now there's a whole new generation of disruptors coming up who were inspired by Casper, like Purple Innovations and Lisa. In the end, there are way too many negatives here and not enough positives. It's good that Casper got hit today, except for the people from Casper. It means that the market it's an unfriendly market to the friendly ghost. The bottom line, I'd love to get some high-quality initial public offerings, but there were some great ones last year buried within the garbage. And we may need to take some time for the pipeline to naturally refill itself. For now, I'm just glad investors aren't falling for companies with good marketing, but slowing growth and zero profitability. Let's go to Dave in Oregon. Dave.
Hey, Jim. I'm calling about Revolve Group. I don't understand why that price is so low on that stock. My daughter's over in Arizona, Madison, and her college girls, they're all ordering Revolve right and left. You got Macy's closing 125 stores. Amazon's looking at the company. They're coming out with earnings on the 25th. If the stock's going down every day, tell me what's going on.
Everything you said is true, except for we don't know whether Amazon's looking at the company, so I don't want to put it. I totally agree with you, though. I thought this is an e-commerce fashion company. I like this. I was talking with someone in fashion yesterday. We were talking about Real and Revolve, and the market has decided that these companies just aren't worth owning. Their day will come, but it's not coming now. Let's go to Tucker in South Carolina, please. Tucker.
Hey, Jim, thanks for taking my call.
Of course.
I'm a freshman at South Carolina.
Yes.
And I was wondering if 2 weeks ago I created a stock portfolio and I evened it up with growth and dividends. And I was wondering if Smile Direct Club was a good growth stock to invest in.
Well, I mean, this is a stock. It's true. Like Virgin Galactic actually comes public. Everyone decides initially that it's good, and then they decide it's really bad. It's a little like Casper, frankly. And then it gets too heavily shorted, and then buyers come in and say, listen, it's not as horrible. But it's the life cycle of an IPO, and Smile Direct's part of it. Now it's kind of burned out again. I would not touch it here. College kids, don't speculate on that when you've got companies like Amazon out there that are so great. All right, this market's appetite has changed. it doesn't have patience for low-quality IPOs, and that's a good thing. A money-losing unicorn like Casper Sleep is just not what investors want. It's what the venture capitalists want and what the insiders want, but it shouldn't be what you want. Much more Mad Money. Taylor Morris is entering a new chapter in his growth strategy, but how does Wall Street feel? Hey, they make homes. You put beds in homes. I'd rather be the homemaker than the bed maker. I'm talking to the CEO of this nation's fifth largest home builder. Then Synaptics is up more than 20% today. It's not a takeover. As the company's new CEO of the Magic Touch, I've got the exclusive. An lawyer calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.